Sanika, if you had to build a portfolio for 2030, then which stocks would you pick? Now, that is a question I get asked all the time. So, where would I look? Now, see, my answer is straight and simple. I would look for high growth sectors which most of the investors are ignoring. But why a high growth sector? Now imagine this, a sector where the tide is rising so fast that every ship, from a small cap boat to a large cap cruise liner, gets lifted with it. Even a decent company in a phenomenal sector can deliver extraordinary returns. Although the steady giants in the FMCG and the banking sector are reliable, but they are not likely to give you that 25 to 30% CAGR growth which we are looking for in the next 5 to 7 years. So today I want to take you into one such sector, a sector that has already delivered massive wealth creation. Stocks here have doubled and some have even tripled over the last few years. But according to me, that was just a warm-up. The real rally in this sector is still ahead. So we are going to explore 4 types of companies in this sector and identify potential stocks for our 2030 portfolio. And this is going to be your roadmap for the next decade of wealth creation. So watch the video till the end. So which sector are we talking about? It is the capital markets and wealth management sector. And the reason why I am so bullish about this sector comes down to a couple of key numbers. First, a recent Motilal Oswal report shows that even today, only 6.9% of Indian household savings are into the equities. For generations, our wealth was locked into physical assets. But look at this chart. See that sharp spike after 2019? Now that is the beginning of financialization of savings. Millions of Indians are moving their money from their lockers into the stock market. And this trend change is creating an opportunity that can create wealth for you. And I will prove it to you with logic and numbers. See, more investors means more transactions and companies like BSE will benefit from it. Now just look at BSE's transaction income. It has exploded at a 35% CAGR over the last 5 years. And now if you take a look at the stock price growth, BSE has rallied 85% in just the last 1 year. Now for the second number, it is from a Nuvama report which says that in India, only 15% of our wealth is professionally managed. And in a mature market like the US, that figure is 75%. So that enormous gap represents a decade-long opportunity for companies that can ride this new wave. So this is why the capital markets and the wealth management sector, in my view, is the best hunting ground for our 2030 portfolio. But to pick the right stocks, first we need to understand the 4 different kind of players in this ecosystem. Before we move on to the stocks, I want to address something very clearly. I run an investment firm called Rangavan Finance, and many of you might think that I am just an influencer trying to sell my courses and push my services, but that is not what I do. I'm not here to talk about or hype 3 stocks and then talk about only one and then say buy my premium services if you want to know about the other 2. That is not my style. These videos themselves are meant to be valuable enough for you to grow as an investor, and you must have experienced it by now. So yes, I will talk about my products and share the results because YouTube does not pay enough and my business needs to sustain itself so that I can run the company. And always remember that my services will always be a byproduct. Informative videos will always come first. So if you like my videos and if they help you out, then you can try out my services. Now coming back to what I was saying, when you enter this sector, you will come across 4 different kind of companies. Now first are the infrastructure builders, also known as the depositories and the exchanges. Think of companies like CAMS, CDSL and BSC. They own the market highways. Every transaction pays them a fee. It is a powerful, almost a monopolistic position. Second are the money managers or the AMCs. These are your mutual fund houses like HDFC, AMC, Nippon India, etc. Now, their job is to outperform the market, but it is a high pressure game because if they fail to deliver, investors leave. Now, third are the on ramps or the brokers. Companies like Angel One, Grow, etc. And these companies brought millions of investors online. But with zero brokerage becoming the new norm, it is turning into a commodity business where it is very tough to maintain an edge. And finally, the player I believe is best positioned for our long term portfolio, the ecosystem architect. Now, these companies do it all. They advise on wealth, they manage the assets, and they facilitate the transactions. They are building a complete financial ecosystem. And I am going to talk about the fourth segment stocks in this video only. But first, let us use this map to find 4 to 5 potential stocks for our 2030 portfolio. See, every strong portfolio needs a solid foundation. And in this sector, that solid foundation is the infrastructure itself. So my examples are BSC and CAMS. But why are these such great foundational stocks for our portfolio? Because their growth is directly connected to one thing which we know is going to happen: more participation in the stock market. As India's equity participation grows from 6.9% towards 15 or 20%, BSC and CAMS earning are set to rise with it. But here's the key to building position in stock like these. See, you do not chase them, you wait for fear. And fear hits these two stocks in two ways. First is the bear market, and second, any regulatory change that scares away the investors. And these moments of corrections are your opportunities. Just a couple of months back, SEBI implemented stricter FNO rules. As a result, everyone felt that BSE's revenue would fall as majority of the revenue comes from the FNO segment. So what happened? The stock came crashing down 35%. Now that was a short-term fear. But then what happened? After 4 to 5 months, the stock recovered. So the point that I am trying to tell you is, do not chase the stocks when they are going up, up and up. Buy them during a discount. For example, right now, CAMS is trading at 25% discount from its peak. So such corrections signal a potential buying opportunity for a long-term investor. Because remember, for a 2030 portfolio, you want to buy the foundation when it is on a sale. Now for the growth engine of our portfolio, this is where I look towards the fourth type of player, the ecosystem architects. Now my examples are Motilal Oswal, Nuvama Wealth Management, and for this space you can even consider a company like Anand Rathi. But why are these my preferred choice for long-term growth? Because diversification. Unlike a pure play AMC or a broker, these companies are not reliant on a single income stream. Now let's look at Motilal Oswal. Their revenue comes from wealth management, capital markets, asset management, and even housing finance. So even if one area faces a headwind, the others provide a cushion. So this is the kind of resilience we need for a decade-long investment. It's the same story with Nuvama Wealth Management. Their business is spread across wealth management, asset management, and capital markets, all growing at a healthy pace. So these companies are not just a product, they are a platform. They capture investors at every step of their journey. So for our 2030 portfolio, we want businesses that are not just riding one single wave, but are built like a ship where you have everything to navigate the entire ocean. And these diversified players are designed to do exactly that. So in this segment, Motilal Oswal, Nuvama Wealth Management, and Anand Rathi are the stocks which are worth building positions in. Again, if you are building positions for 2030 long-term wealth creation, then valuation matters. Always keep an eye on the PE ratio and then only start building positions. For example, Motilal Oswal, which is trading at a very high PE of 28. So here I will avoid building positions right now. And same is the case with Anand Rathi as well, which is trading at a 69 PE, which is very expensive. But look at Nuvama Wealth Management. It is not overpriced, trading at a fair price and also available at 14 to 15% discount. So in such a discounted, fairly valued stock, one can think of building positions now. Building a portfolio for the next decade is a serious task, and the ideas which we discussed today, the infrastructure players like BSC and CAMS, and the ecosystem architects like Motilal Oswal and Nuvama Wealth Management are powerful starting points. But a long term portfolio is not built in a day, and you should not rush into it. Every investor's journey is unique, and navigating it requires a clear strategy. So, if you are ready to take the next step but want expert guidance to build your portfolio with confidence, then check out our model portfolios on rangavan.finance. And always remember, your growth is our priority. This was Sanika from Rangavan Finance, and I will see you very soon in the next one. Bye bye.